why economists aren't day traders. Kind of a spicy title in here.
I was looking at that last night. I was like, okay, Frank might step on some toes here.
And I don't mean to, but maybe I do actually a little bit. Because there is a distinction. What I more want to do is draw on the distinction between the two occupations and speak to why you don't maybe want to blend the two ideas of someone who is in an armchair talking about the economy versus someone who is in at a standing desk trying to trade stuff back and forth. And of course, those caricatures mean nothing, but you can kind of get where I'm going with this, because I think that it can be unhealthy. And you and I talk all the time, Errol, about how a lot of news and a lot of reporting and economist talk is great for digesting on the weekend, and talking about with your friends and family over, a cocktail or food or whatever you do, but not necessarily the best for trading, right? That's a distinction that we draw on often.
100%. And I think we go back to the fact that a lot of that can be noise for a trader, if anything.
Exactly right. Like that's you start to rope in things that maybe don't matter. Like we are traders who try to put together a lot of statistics, a lot of information that creates edge in the markets. And then we try to be, emotionless, about those decisions. And what news or economists or data releases like the US inflation rate, what that stuff can do is muddy your strategy, the way that you have tried to enter this market to make money. Now, that being said, Errol, a data release like the US inflation rate can create a lot of opportunities for a day trader. But the reason why you wouldn't necessarily take an economist's point of view on trading the markets that we're going to look at here in a second is because it's not so black and white as you might think. So we have the US inflation rate, Errol. Yesterday, the release comes out. Going into that release, it's expected to be 8.8%. It comes out higher than expected, 9.1%, not only higher than expected, highest inflation that we've seen in 40 years here in the US. And so when you tie that into the fact that markets have been acting in a certain way since inflation has started to rise, you would expect everything to continue to go to further extremes in the wake of such a reading. And so this is what markets have been doing since inflation has moved above average. US dollar is up to historic extremes. Interest rates are up to historic extremes. Stocks are down to lows for the last couple of years. And gold and silver are both down to lows for the last couple of years. Is that a good synopsis of how inflation has been affecting markets, Errol?
Yeah, 100%. And when you were touching on how this creates opportunity for traders, are you saying creates opportunity as in volatility is creating the opportunity for us?
Exactly right. Like inflation readings and all the news and everything that comes out, stock earnings, everything else, it creates volatility, which creates opportunity for traders, or creates price action, which is opportunity for traders. But the reason why you might not look at an earnings release or an inflation reading, Errol, as an opportunity to do what an economist says should happen is because what we're about to see. So given all this information, Errol, you get the highest inflation reading that we've gotten thus far in this whole trend. And so you'd expect US dollars, for instance, which is kind of the first tier mover and what we're going to zero in on here, you'd expect US dollars to rally through all-time highs. And they rallied on the number initially right through all-time highs. The initial move is right up there. But this, of course, happens within seconds, within minutes of the release coming out from algos and everything else. You're going to have a hard time chasing this, right, Errol? I mean, I'm sure you've watched like Apple earnings comes out and immediately the stock is up or down 10%. Yeah. Someone like you and me isn't going to be able to get in on that, right?
No, and if you do, you got to guess. That's all you can really do. It's too quick for you.
You have to guess going into it, which is the toughest game on the planet. Yeah. Guessing something going into an earnings release or an inflation release, or you have to have a really fast system which professional proprietary trading firms and different high frequency trading firms in Chicago, New York, and other big hubs, they're going to be faster than you. So what can we do as, day traders, Errol? Well, we can look at the fact that, yes, this is the highest inflation ever. And yes, economists would say US dollars are going to go screaming higher, but we just look for the price action, look for the volatility, look for that big rally up. And we sold into this move, given that it was an abnormally high US dollar price, an abnormally big rally in US dollars. After the number, Errol, you see this kind of quick reversion back a little bit and then circling those highs. And this is the market. This initial move is those algos running up the market off of that data release. This is, huge institutions, banks, and huge funds kind of shifting stuff around in the US dollar market, trying to decide what this actually means. And then the market came all the way back to unchanged, actually negative on the day. And if you were an economist going into such a reading, Errol, you would think for sure US dollars have to be higher on the day. If you tried to chase that, economists thought you'd get whipsawed in buying this market through the highs, and it ends up coming back. Traders not so surprised by this, Errol, because when you see a big 1 or 2 standard deviation move, we're looking to get on the other side of it, knowing that it's rare, even for such a big event as the highest inflation we've seen in 4 decades, right?
Yeah, pretty much us trading the reaction, so to speak, rather than trying to guess the move, because we just won't know. So, I mean, that makes perfect sense. And I'm assuming that's what the green arrow was for. Or was it green? I'm a little colorblind, to be honest. But on 2 slides ago, we had the arrow that was sitting at 167. Why was that arrow there again, Frank? Was that like us trading the reaction?
Pointing out the reaction here in the markets and why, because a lot of people would ask, like, man, how could you possibly sell US dollars with inflation being the highest it's been in 40 years? Well, guess what, friends? Like, US dollars have been rallying like crazy. Before the inflation number, they were at highs since 2002. A lot of this stuff gets priced in beforehand. And so on the day where an inflation reading comes out, an economist might think, oh, this is going to translate to US dollars being up 2%. Traders out there, just look for the price action, look for the volatility, and look to trade those things. Because this is actually the second time we've seen such a move in as many weeks, Errol, where the Fed came out and hiked huge a couple of weeks ago. And on the day that they hiked, interest rates actually fell because a lot of this stuff gets priced in beforehand. So this is why you might not day trade, Errol, based on what an economist says here, and why economists are, what they are, which is great at hypothesizing about what markets might do in the future, but aren't necessarily good at connecting the dots in the short-term fallout from such an event like an inflation reading.
No, right. I mean, case in point, I mean, trying to guess this price action would be a nightmare instead of just going by the net change and trading by the mechanics, really.
Exactly right. Well, Errol, thanks so much for joining us here. It's always fun to have you on Small Stakes. Great questions and insight from a young trader's point of view. As always, make sure you're checking out today's assignment on the Tasty Trade Network. Errol's also doing great work on Twitter, TikTok, and everywhere else. Everybody, thanks so much for watching. We'll be back with more Small Stakes tomorrow and hopefully some more trading. Make sure you're day trading out there. This is some of the best opportunities we've seen all year. Splash into Futures is coming up next. Stick around for that and have a great night, everybody. Peace.